Alright everyone, today is December 8th. It is midnight 30 Pacific, and price in the euro has went to a support level that I am now comfortable with taking along, and tomorrow is a reversals day. So as you can see, all of these red lines on my charts are support and resistance levels that I have, and this was actually a support level at 1745, in between 1745 and 25. And price still can go down a little bit, but I'm expecting price to find extreme support at the 1725 level, or just right in that 1720 level, if it does continue to go down a bit more. If not, so basically what I did is I went long at 1740, and tomorrow during the non-farm payroll, I expect price to go up, and I expect price to shoot up back to the 1810 level, and if not higher. If we look at it on a bit of a larger time frame, you would see that earlier this week I had this as the 1, 2, and then this is the 1 of 3, and then I had this as a possible 2, but I had an alternate as A. I had this as a B, or that was the 1, but then as you can see, if price went down, this was my B and this is my C. So I get rid of this 2, because obviously that's not a 2. So now I get rid of the alternate part of it, and that's A. So we'll have A there. Bring it up a bit. And then we have B here. And now this definitely appears like some sort of diagonal, which it appears like an ending diagonal. Now this blue line, I drew this when none of this was here, because I figured if this was the A, the B, then price would end somewhere. I had it going to about 1740, give or take. As you can see, price went to 1736. That doesn't mean it can't continue lower, but I was expecting it to go around the 1740 level, because that was another support zone that I had labeled earlier this week. So I can get rid of this now, and I expect price to come. If you really look at it, where I'm kind of looking at, there's been some previous support levels, and that previous support level is 1722 area. So if you go to my 1722 where my cursor is now, and you look all the way back to your left, you'll see there have been several occasions within the last couple of months that price has found support at that level. So if history rhymes, doesn't have to repeat itself, but if it rhymes, then price could go back to the 1720 level, and it could sorry, I had to get this update thing out of the way. It could so what I was basically saying was that it can go back to the 1720 level, and then it can bounce. But tomorrow is a reversal day, and tomorrow is also the non-farm payroll. So this is just a gut feeling. This has nothing to do with Elliott. But what price may do is it may do nothing until 5 hours from now, when the non-farm 4 hours from now when the payroll happens. You'll get a minor spike. So it may, let's say hypothetically, it can come up to about 1780. Go back to the 1785. Let me show you on a 15-minute chart. Price could come here. Let's see, I'll show you. This is what I'm expecting. So I'm expecting price to come here back to this particular resistance level over the next course of the couple of hours. Bounce, come back. It's either going to bounce here at 17 at the 45 level, or here at the 1720, which I was expecting. Once it finds that particular support, then when the non-farm payroll comes out, I'm expecting a move back up past 1855. So that's what I'm expecting. That doesn't mean that it will or will not happen, but that's what I'm expecting. So this is why I'm short. I'm sorry, this is why I am long at 1740. And I actually got a relatively wide stop. I have a stop at 1705 versus 1720 because of the slippage on the non-farm payroll. If you see any spike at all, normally it spikes down, then up, or up, then down. So I want to make sure that I'm still in the trade after the spike. And that's if it spikes. It can just continue. But this is just where I see it. And this is just on a support and resistance level. Has nothing to do with Elliott. Just as it's basically a planetary support and resistance level. So it's similar to like GAN, FAN, and those things. So it's just another a way of trading. Moving on, another market. I was in the panel. I was up 100 or so pips, and I think I got out right around 133.80 or so, and I think I profited about 95 pips on that one. What this market is telling me is when the pound goes up, the euro tends to follow shortly after. And what this is also telling me is that it's possible that this 2 is not a 2. And it's maybe possible that the top left end of 4, this may be in jeopardy. So because we've had these spike ups over the last 2 weeks, just these gaps, I'm gonna stay out of the pound until I get a better understanding of what this is. There's markets to trade. I did good in the CAD. I jumped out of the CAD going short, and I ended up going long. So I took this red bar, and then I got out, and then I noticed price found a little bit of a double bottom, and I waited 30 or 40 pips, and I jumped back in. And as you can see, I'm up 170 pips. The problem is I'm only less than a half of a contract. So it just seems like when I trade very small, I get a lot of pips. But then when I trade a little bit big, 50, 60 pips here and there. But it's okay, it's still money. So that's just the name of the game. At the end of the day, I'm going to leave it with what I started, which is the euro. If this is the 1 and this is the 2, then you have the 1 of 3, you have the A, B, and C. But this particular 2 will be a very deep 2 in comparison of this 2. So it is possible that this is a 1, this is an A, this is a B, and then you have a 1, 2, basically 3, A, B, C for 2. And if that's the case, then price would probably go just shy of 1712 to maybe 1710, or you will have a truncated wave C. There is another way to count this, but I'm going to wait and see what patterns unfold during the non-farm payroll. If you look at my RSI here at the bottom, it's definitely oversold. So this is an indication that it is possible that we will see higher prices. So good luck, and I'll have another video tomorrow. Happy trading.